Let's talk about tractors right now. Deere joined rivals CNH and AGCO in lowering its outlook for 2025 as farmers spend less on equipment than they did at the onset of the war in Ukraine. Of course, that's the breadbasket of Eurasia. Now, the industry is also bracing for tariffs from the incoming Trump administration. Let's discuss with Bloomberg Intelligence analyst Chris Cellino. So, Chris, what's the story look like for Deere? Because it didn't look great to me, lower than expected profits next year, and yet investors are bidding up the stock today.
Yeah, you're right. I mean, the 2025 guidance wasn't great, but buy-side expectations heading into the print were very, very low. A number of their competitors reported big misses and cut their outlooks this quarter. So I think the outlook here is maybe a little bit better than some investors had feared. That being said, the farm economy is still quite challenged and will be again next year. I think there's growing optimism that 2025 will kind of mark a bottom in the cycle. The worst of this large ag inventory destock seems to be behind us. So the magnitude of those production cuts should begin to moderate as we move through next year. Those are the positives. I don't think we're completely out of the woods yet, though. And I think it's still maybe a little premature to call a cycle bottom. One, farm fundamentals continue to remain weak. And two, we're on the precipice of another trade war with our largest ag customer. So we think this really runs the risk of extending this downturn.
Speaking of, I want to pull up now a chart for the full year for Deere because it was a really weak year last year. This year has been sluggish as well. But the worst of the pain in the stock actually came well before the election. And after the election, you did see a dip off, but then a rally back up. And so I'm wondering how much real risk there's not being priced in right now when it comes to those trade tensions and the impact it could have on the stock.
Yeah, it's significant. I think the trade uncertainty is real, and I don't think it's fully appreciated yet. And I think uncertainty is like kryptonite for capital spending on farm equipment. Farmers are not going to go out and spend until there's better trade visibility with arguably our largest customer. How exactly this unfolds, nobody's 100% sure yet. So I still think farmers will take a wait-and-see approach to spending.
Let's get more specific when we talk about trade. I want to talk about tariffs in 2025 because, of course, President-elect Donald Trump, he's threatened tariffs specifically on any products that Deere makes in Mexico and then sells in the U.S. You're talking about farmers here, but talk about Deere, for example, and how you approach them as an analyst. How do you potentially model that into their results in 2025?
Incredibly difficult. I do think the biggest risk here is with China because, they are the largest buyer of our crops. We sent nearly $30 billion of ag exports to China last year. That was 17% of all of our ag products. They're the largest buyer of soybeans. That is a big, important crop, particularly for Deere and row crop farming. Then you throw on top of that additional tariffs on other regions like Mexico, which is still also an important buyer of our crops. It could be incredibly complex and difficult to model this in, to say the least. And again, I go back to my point of, if farmers don't have any kind of visibility on some of their relationships with their largest customers, they're just not going to go out and spend.
What about other costs that they deal with? I mean, in the event that fuel becomes less expensive, and I know prices at the pump have been coming down, but we could see even more relief. In the event that electricity becomes cheaper, do farmers then have more to spend on equipment? Is that kind of a jump you can make, a leap you can make?
No, I don't think so. Certainly to help with their P&L a little bit, but ultimately at the end of the day, what drives farmer income and farmer profitability is crop prices, and they get that through corn, soybeans, wheat, and selling to some of their larger customers. So that was ultimately what's going to drive demand for Deere.
Chris, we have to leave it there. Thank you so very much for all of your analysis. That is Bloomberg Intelligence industrial analyst Chris Cellino.